Good morning, ladies and gentlemen. On behalf of Mangalore Chemicals and Fertilizers Ltd and SKP Securities, it's my pleasure to welcome you to MCFL's Q2FY25 result webinar. We have with us Mr. Nitin Katak, Full-time Director, along with Mr. T.M. Muralidharan, Chief Financial Officer. This webinar is being recorded for compliance reasons, and during the course of this discussion, there may be certain forward-looking numbers or statements, and these must be viewed in conjunction with the risks that the company faces. We'll have the management's opening remarks and presentation, followed by a Q&A session. Thank you, and over to you, Mr. Katta.
Thanks, Naveen, for arranging this call. Good morning, everyone, and welcome to our Q2 FY25 investor call. I am pleased to report that MCFL has performed well this quarter, despite facing some operational challenges. The overall business scenario has remained buoyant, driven by favorable agricultural and weather conditions. The southwest monsoon has been excellent, with India receiving 8% excess rainfall compared to the normal, and southern peninsula, where a majority of our key markets are located, receiving 14% excess rainfall. This has set the stage for robust agricultural activities and improved crop yields. In terms of crop acreage, India has surpassed the 5-year average for the Kharif season, reaching 110.86 million hectares by end of September, giving prospects of yet another record food production for this financial year. Additionally, the water reservoir level across the country stand at 114% of the 10-year average, with the southern region exceeding this at 123%. With a favorable northeast monsoon forecast for the upcoming Rabi season, we are well positioned to benefit from these positive conditions. Fertilizer industry in India has performed exceedingly well in the Q2 this year. All India urea sales for the quarter increased by 3.8% year-on-year to 12.7 million metric tons, and for H1 it was up 2.8% to 18.9 million metric tons. All India DAP sales for the quarter, however, were down 56% to 2.6 million metric ton, and for H1 it is down 37% to 4.6 million metric ton. DAP availability during the Kharif season continued to be a major challenge in the international market, hence the sales were much lower. The lower DAP sales, however, have been made up with higher NPK sales for the quarter, which were up 10% to 5.1 million metric tons, and for H1 they were up 18% to 7.3 million metric tons. All India MOP sales for the quarter were up 14% to 6.2 lakh metric tons, and for the half year they were up 20% to 9.3 lakh metric tons. Operationally, while we faced challenges with outages in phosphatic production in August due to non-availability of phosphoric acid, and in the urea production due to ammonia plant shutdown in September, our plants have still delivered commendable results overall. Urea production in the first half of the year reached 2.1 lakh metric ton, exceeding our targets, while the phosphatic production was slightly lower than the target at 1.48 lakh metric tons. On the sales front, we achieved 3.7 lakh metric ton in the first half of the year. Though constrained by lower production and reduced imports of traded fertilizers due to unviable prices, it still reflects our strong market presence and the demand for our products. We continue to maintain top position in N20 sales in Karnataka in H2 with a market share of 21%. Financially, we have navigated the challenges effectively and continue to maintain a decent performance, supported by favorable agriculture conditions and strategic operational adjustments. Looking ahead, with a positive outlook for northeast monsoons and a promising Rabi season, we are poised to build on this momentum and achieve better results in the second half of the year. Thank you for your continued trust and support in MCFL. I will now hand over to our CFO, Mr. Muralidharan, to walk you through the details of our performance. Thank you. Murali, you can take over, please.
Thank you, sir. Naveen, can you share the presentation?
Yeah, just one second. I'm putting it on. Really, is it visible?
Yeah. Please. Yeah. Good morning to all of you. In this presentation, we shall cover the highlights of the performance for Q2 FY25, H1 FY25, and the past annual performance. The overview of Q2 FY25. India production resumed in the last week of September 2024 after shutdown in the first week of September for replacement of reformer catalyst, as explained by our CEO. Phosphatic production faced challenges on availability of raw materials. Reduced imports due to unavailable prices. These are the key highlights or overview of the operations for Q2 FY25. Now we shall look at some of the highlights of Q2 FY25 and H1 FY25 with the corresponding period of FY24. We have posted sales volume of 1.81 lakh metric tons in Q2 FY25 compared to 3.32 lakh metric tons in Q2 FY24, a reduction of 45%. Since the urea plant was shut down during the month of September for replacement of reformer catalyst and reduced imports as compared to Q2 FY24. We have posted sales volume of 3.71 lakh metric tons during H1 FY25 compared to 5.41 lakh metric tons H1 FY24, a decline of 31% due to urea plant shutdown and reduced imports as explained earlier. Revenue for Q2 FY25 is at rupees 776 crores compared to 1,410 crores in FY24 Q2, a decrease of 45% on account of reduction in sales volume of urea and imported phosphatics. Similarly, we have posted a revenue of rupees 1,590 crores in H1 FY25 compared to rupees 2,368 crores in H1 FY24. EBITDA for Q2 FY25 is at rupees 81 crores compared to rupees 152 crores in Q2 FY24, which is a decrease of 47%. And EBITDA for H1 FY25 is at rupees 193 crores compared to rupees 276 crores in H1 FY24, which is again a decrease of 30%, is primarily due to reduction sales volume as explained earlier on. PBT in Q2 FY25 is at rupees 41 crores compared to rupees 106 crores in Q2 FY24, a reduction of 62%, and PBT in H1 FY25 is at rupees 109 crores compared to rupees 182 crores in H1 FY24, a reduction of 40%, primarily on account of reduction in sales volume. PAT in Q2 FY25 is at rupees 26 crores compared to rupees 68 crores in Q2 FY24, a reduction of 62%, and PAT in H1 FY25 is at rupees 70 crores compared to rupees 117 crores in H1 FY24, a reduction of 40%. EPS for Q2 FY24 is at rupees 2.23 per share compared to rupees 5.7 per share in Q2 FY24, a decrease of 62%. And EPS for H1 FY25 is at rupees 5.93 per share compared to EPS of 9.87 in H1 FY24, a decrease of 40%. Next slide. We shall discuss about the details of production, sales, and revenue. The production and sale of urea is 0.88 lakh metric tons and 0.96 lakh metric tons respectively in Q2 FY25 compared to production and sale of urea of 1.1 lakh metric tons and 1.15 lakh metric tons in Q2 of FY24. As far as H1 FY25 is concerned, we have achieved production and sale of urea of 2.10 lakh metric tons and 2.12 lakh metric tons respectively compared to 2.32 lakh metric tons and 2.36 metric tons in the corresponding period of FY24. With regard to complex fertilizers, we have sold 0.85 lakh metric tons in current quarter compared to the 2.18 lakh metric tons in Q2 FY24. In H1 of FY25, we have sold complex fertilizers of 1.59 lakh metric tons compared to 3.04 lakh metric tons of corresponding period of previous year. Coming to revenue from operations, urea business has posted rupees 430 crores in Q2 FY25 compared to 436 crores in Q2 FY24 and rupees 939 crores in H1 FY25 compared to 966 crores in H1 FY24. Non-urea business posted revenue of rupees 346 crores in Q2 FY25 as against rupees 974 crores of Q2 FY24 and rupees 651 crores in H1 FY25 as against rupees 1,402 crores in H1 FY24. Net worth has grown by 89 crores between September 2023 and September 2024. The net worth stands at rupees 992 crores at the end of September 2024. In long-term debt, there is net decrease of 67 crores in September 2024 over September 2023 after factoring repayments. In short-term debt, primarily working capital is rupees 505 crores in September 2024 as against rupees 633 crores in September 2023. The reduction is due to improved liquidity. The short-term surplus is rupees 341 crores in September 2024 as against rupees 959 crores in September 2023. Now we move on to the position of receivables. As all of you are aware, the receivables in the work industry is on account of dues from dealers and as well as from the Government of India on account of subsidy receivables. The daily receivable is rupees 177 crores in September 2024 as against rupees 185 crores in September 2023. Subsidy receivables is rupees 113 crores in September 2024 as against excess receipt asset September 2023. Thank you. Now we should look at some annual past performance. Revenue from operations was rupees 2,711 crores in FY20, has increased to 3,795 crores in FY24 at a CAGR of 9%. In respect of EBITDA, from the levels of rupees 200 crores for FY20, We have been able to maintain the EBITDA even during difficult times in FY21 and FY22, have been able to improve it to rupees 2340 crores in FY23 and further improve to rupees 417 crores in FY24 at a CAGR of 16%. PBT has also improved from rupees 70 crores in FY20 to rupees 241 crores in FY24 at a CAGR of 36%, and due to receipt of natural gas in FY21 and consequent fiscal incentives and successful commissioning of ammonia energy improvement project in FY23. Similarly, PAT has improved from rupees 65 crores in FY20 to rupees 155 crores in FY24 at a CAGR of 24%. Next. Cash profit has improved from rupees 110 crores in FY20 to rupees 226 crores in FY24 at a CAGR of 20%. Earnings per share has also improved from rupees 5 per share in FY20 to rupees 13 per share in FY24 at a CAGR of 24%. The total receivables reduced from rupees 1,446 crores in FY20 to rupees 604 crores in FY24, which is about 15%. The reduction in subsidy receivables is on account of improved liquidity in the market and significant reduction in subsidy receivables due to fiscal stimulus given in FY21 during COVID-19 to clear the subsidy arrears and continued additional support given in FY22, 23 and FY24 by the Government of India and time disbursement of subsidies. We expect a similar trend to continue going forward as Government of India is committed to ensure that the health of the fertilizer industry is a priority by timely disbursement of subsidies. Next one. We shall look at the details of production and sale of urea. We have been able to consistently produce 3.8 lakh tons per annum, which is our research capacity. However, in the financial year FY23, there is a reduction in production due to shutdown of the plant for implementation of the energy improvement project. The trend in sale of P&K fertilizers is based on availability and viability in this vertical. Next one. We carry this slide for the first time participants to give an overview of our operations as regards location of the plant, products manufactured, capacities, marketing territories, and the brand. As many of you are aware, the plant is situated at Mangalore in West Coast, opposite Mangalore port, and our present research capacity of urea is 3.8 lakh metric tons, and capacity of DAP and other complex is 2.8 lakh metric tons per annum. We also do trading in MOP, DAP, and 10-26-26 based on market opportunities and business viability. We operate in the states of Karnataka, Kerala, Tamil Nadu, Andhra Pradesh, Telangana, and Maharashtra. We sell about 81% of our products in Karnataka, 2% in Kerala, 7% in Tamil Nadu, 3% in Andhra Pradesh, and 1% in Telangana, and 6% in Maharashtra. We sell under the brand Mangala. Thank you for your time.
Thank you, Mr. Kanta. Thank you, Murli. Friends, we now open the floor for the Q&A session. Anyone wishing to ask a question, request you to raise your hand. We'll take it up. The first question is from Darshita Shah. Darshita, please unmute yourself and go ahead.
Hi, thank you for the opportunity and for the presentation. Murli sir, my first question is regarding the quarterly EBITDA per ton. If you can confirm if urea EBITDA per ton during the quarter would be 5,000?
Yeah, 5,000. Okay, you got it right. You're tracking very well.
Okay. Yeah, so I think if we reverse calculated, non-urea would be closer to 4,000 odd. Okay, 3,800 odd. Got it. Second question was regarding the phosphoric acid availability now. Has it improved as we go into the third quarter?
Yeah.
Darshita, there is an improvement in the availability of phosphoric acid, and in fact, in October we are having good productions, and this will continue during the quarter. we don't expect any challenge in the remaining 2 months of this quarter also.
Okay. So can we do, last year in the second quarter, we had done some 1 lakh odd volume in NPK. Can we see that kind of a quarter in third, like that kind of non-urea sales in third quarter as well?
Except for the imports, I think production side, we will make up the production in the remaining part of the year. Urea as well as the NPKs. NPKs total we had 3.2 lakh metric tons for the year, and we are on course to achieve that 3.2 lakh tons. And as far as urea is concerned, we posted 4.35 lakh metric tons for the year, and this year also we are going to touch 4.3 or slightly higher than that.
Okay, so we are confident that FY24 volumes should maintain for FY25 as well.
Well, it's production volumes, but as far as the imports are concerned, last year we had done almost 1.15 lakh tons of imports, and most of that was in the Q2 of last year. But this year the conditions are not so favorable. The DAP, there are very less margins or negative margins on DAP imports, and also the availability of DAP is a challenge in the international market. So we don't envisage any major DAP imports happening. However, we have done some imports of MOP of 15,000 tons in Q2, and we expect some more imports to happen in Q3 and maybe Q4. So only to that extent, the traded volumes will be there, but it will be much lower than what we did last year.
Got it. Perfect. I had a question regarding the tax rate. Why are we, consistently I've seen we do a tax rate of about 35-36 odd percent. What's the reason behind that?
Okay. I'll take this question, Tarshita. Tarshita, we are carrying some MAT credit, okay, in the books of account, okay. So when we move on to new regime, this MAT credit, what we are carrying forward, cannot be utilized. So based on that reasons, we are providing for this higher tax. Even only books of account is making provision, but the outflow is based only on the MAT credit only, okay. And this year, FY25, we'll be completing the utilization of MAT credit for credit, whatever you're carrying forward. And this MAT credit is available to us because of the excess depreciation we claimed on account of 35AD and all, as per the policies, government, the income tax department act. Okay. So going forward, from next year onwards, we will move on to the new regime of 25%. It's not 20%. Okay. It is, if you add on all the surcharge, other things, cess and all, it's 25%. We saw 35%. Okay. The delta is 10%. Okay.
Got it. Perfect. What is the phos asset that what Nitin sir mentioned about with respect to getting enough phos asset quantity? What is the current price at which we are importing phos asset for third quarter?
The price for this quarter has still not been decided, but it is likely to go up. And we don't know exactly how much it will go up. Current price for the last quarter was $950, but certainly it is going to increase, maybe about $100 or so.
Okay. And as there is so much DAP unavailability, importers are not being able to import because it is not a viable option, and that it's not only MCFL. I think the entire industry is facing the same.
Yes. In fact, the sales are down.
Right.
Imports and sales are substantially down. Yeah.
Right. So are we in conversation with the government to give us a further more package on that subsidy, especially because we are expecting phos asset prices to go up for the third quarter?
As of now, there are no expectations of any subsidy increase happening because that was already declared for the second half of the year in September, and that is not going to change. However, there is a scope for increase of the MRPs. In fact,
Oh,
government is likely to allow us to increase the MRP of DAP, which was frozen for last 3 years at
hmm,
1,300 rupees a bag. This is
right.
likely to be, you'll be allowed to increase from January onwards.
Okay.
And
And
for the MRP of the other NP, NPK products, as per the market conditions and getting some decent contributions going forward based on the increase in the phosphoric acid price and the imported DAP price, we are going to increase it.
okay. Okay. And any idea as to how much MRP increase can we expect in that?
That we cannot say as of now, because even
Okay.
currently on DAP, there is no decent contribution. In fact, it is slightly
Hmm.
negative. Only I
Hmm.
think those who are manufacturing with their own phosphoric acid to the rock route are able to get some margins.
Got it. Got it. Okay. And for us to increase the NPK rates also, I mean, is the channel inventory in place, or is there higher channel inventory of NPK products?
Right now, no. In the Kharif season, there was quite a bit of inventory was there with all the manufacturers, but currently the stocks are quite low, and
Okay.
it is not so much, it is quite less. And the demand
Okay.
also has been quite good for NP and PKs.
To add on to supplement Mr. Kantak, Darshita, the southern markets were able to adapt to this availability of DAP, non-availability of DAP. So they are able to consume they would migrate from DAP to complex fertilizers. One of the reasons where this, as Mr. Kantak was explaining, the inventory is low because people are able to adapt to migrate to N20 instead of DAP. And good consumption happened already so far, and another few months some more consumption happen. So there's no huge pipeline inventory of complex in the southern markets where we operate. Compared to the northern markets are operate differently. Each
Got
market
it.
operates behaves differently.
Right. Right. What would the current MRP be of N20, and how much price increase are we planning internally to take on N20?
So it is about 1,300 a bag.
Okay.
That is our MRP. But
Hmm.
going forward, based on the new acid price which is going to be decided, we will take a call on how much
Got it.
increase we should have.
Got it. Got it. Okay. And the sulfuric acid plant commercialization, are we on track? I think we were supposed to commercialize in August 2025. Is that on track, or is there any
On track,
change there?
overall engineering is 63% completed. All the
Okay.
piling work is completed. Civil works are going on. Storage tank foundation is completed, and all other foundations work is going on. Order placement for all the long lead items have been already done, and manufacturing clearance has also been given to some of the long lead items. And things are under control, and we still are on schedule to complete it by August 2025.
Got it. Murli sir, what was the current GCal and gas cost for the second quarter for urea plant?
The gas cost is coming on GCV basis is $15.2 per MMBTU.
Okay.
And it's almost, Ms. Darshita has been fairly static, this same range, okay?
Got it.
In the all of
Right. Yeah.
H1, okay?
And GCal continued to be at about 5.6 levels?
Yeah, similar levels.
Got it. Got it. Okay. And I had one last question regarding I had even asked this earlier as to what the impact could be once our subsidy, the GCal that we are currently getting for urea plant, once it is revised downwards, what would the impact be on our urea EBITDA per ton? I think the last time when we had spoken, you had mentioned about 1,000 odd rupees per ton impact is what we are anticipating. But are we still keeping that number intact, so from current 5,000, would the urea EBITDA per ton come down to 4,000, or would the impact be larger than that?
Similar levels will continue. See, this is a factor of one more factors on the gas price also. The current prices they will hold up to 4,000. Okay, plus or minus depending upon the consumption also. You know that. Okay. Okay. So we hold the same view. Not a problem.
Got it. Okay, that's all from my side. Thank you so much.
Thank you, Rasta.
Siddharth. We take the next question from Prashant Biyani. Prashant, please go ahead.
Yeah, hello. So, Mr. Kantak, in your last con call, you had updated or you had alluded to some capacity expansion at MCFL site or acid-related expansion at Paradip or OCP site, which can happen post merger clearance for both the companies. Sir, can you update? Would you have any further update on those plans? Where are we on future capexes?
I told you last time, once the merger process is completed and we are part of PPL, we are going to take a call. There are a lot of plans for additional capacities. NPK capacity, almost 1 million tons coming up at Mangalore. And possibly backward integration with phosphoric acid coming in Paradip, or it could be also in Morocco with our partners OCP. But these plans will be decided only after the merger process is completed.
Right. Sir, at MCFL, where from do we currently procure phosphoric acid?
Right now, the procurement of phosphoric acid is happening through PPL, and most of that is from the OCP. And sometimes, as and when OCP acid is not available, we look at either Jordan, Senegal acid, or even sometimes Chinese acid.
Sir, X of PPL, for example, Jordan, Senegal, or Chinese acid, how much would these be as a proportion of total acid purchase?
It could be hardly about 15-20%. That also, as I told you, only when the OCP acid is not available due to whatever constraints, and whenever we get gap, that's the time we try to arrange from Jordan or Senegal or China.
Sir, if I'm not wrong, we do have frequent outages of raw material availability in complex. Is it something to do with the suppliers or with our own plant?
No, it is not to do with our own plant. Our plants operate quite well. There is absolutely no issue with the plant. But yes, there are challenges, because of this fights going on, this Israel war, and longer route taken by the ships, going through Cape of Good Hope. So it is unpredictable. Sometimes the vessels get delayed, and that results in outages of the plant.
So these outages have been only after this Middle East crisis, not before.
Yes. Otherwise, normally we should not get a crisis unless acid is in short supply and not available.
Right. And would we be getting acid at the price that is fixed, or do we get some discount on it?
No, we get at the same price, whatever is international price, CFR price for India, which is declared. Only once we get from Vietnam and all, sometimes there is a zero duty on that. To that extent, we get some advantage.
Right. And sir, how will Paradip benefit from its association with MCFL on the sales and distribution side?
Yeah, if you see, PPL is mostly into the north part of the north, you can say, and east and western market, and maybe south only Telangana, part of AP, and maybe northern Karnataka. And if you see, MCFL is very prominent in the entire Karnataka, Andhra Pradesh, and Tamil Nadu. So, based on our NPK product mix, when we are together, we can decide on the product mix, what would be the most optimum for the entire company. And based on that, what is manufactured at Paradip can go down in the southern region. And also from that point of view, MCFL also gets access to the northern markets and eastern markets as and when, the southern side, some challenges are there.
Sir, would Maharashtra be mostly covered by PPL or MCFL?
Now, we sell only about 5 to 6% of our products in Maharashtra. And actually, the Goa plant of PPL supplies largely to Maharashtra. And also the Paradip plant, also a lot of stock comes to Maharashtra. So they supply much more than what MCFL does.
Okay. Sir, what would be the current sulfuric acid price?
Sulfuric price will be about $110, $105 to $110 per ton.
And would you be knowing the current rock price?
Rock price, I will not be exactly knowing. I'll have to get back, but it will be somewhere around $250 or so. It depends on the grade of the rock also. There are different type of rocks which are there in the market, and OCP supplies also 2-3 grades of rock. And it may range from somewhere around $250 to higher around 300 plus also, 350 also. But I will not be having the exact details.
Okay, sir. That's it from my side. Thank you.
Thank you.
Darshita, do you have a follow-up question?
No. All my questions are answered. Thank you.
Okay. We take the next question from Sneha. Sneha, please go ahead and ask your questions.
Am I audible?
Yes, loud and clear.
Yes.
Please go ahead.
Thank you for the opportunity. Sir, I just wanted an update, like what is the progress on the merger, basically? Sorry if I missed it. I joined a bit late.
Yeah, Darshita, just to give update, as you may be aware, the board of directors in the 7th February board meeting had approved the proposal of the scheme of arrangement among the MCFL, PPL, and the respective shareholders and creditors. Company has obtained NOC from all the lenders. The CCI approval we have got somewhere in July, and the company had submitted its application to the stock exchanges in February. Both the stock exchanges have verified the same, and then BSE, which is our designated stock exchange, has forwarded our application to SEBI for its NOC. BSE Limited has issued a letter dated September 2, 2024 to the company, in which it has mentioned that SEBI has returned the scheme with certain observations. The company is right now evaluating the next steps to be taken in respect of this letter, including considering modifications that may be required to be made to the scheme to address the observations of the SEBI.
Mm-hmm. Any tentative date or internal date that you think this might be fulfilled by?
Yeah, once we get the approval from the stock exchange and SEBI, then we have to go to NCLT, and the process will take its own time. We cannot estimate the time as of now. It depends on the regulatory approvals, whatever time it takes.
Okay, sir, got it. Thank you.
Yes, thank you. Friends, anyone with a question, please raise your hand. Prashant, do you have a follow-up question?
No, I don't.
Friends, anyone with a question, please raise your hands. As there are no more questions, I hand over the webinar back to Mr. Kantak for his closing remarks. Sir.
Thank you, Navin. As we close, I want to express my appreciation to our investors, stakeholders, and the entire MCFL team. The results of Q2FY25 highlight our resilience and ability to navigate operational challenges while leveraging favorable external conditions. With the above normal monsoon, strong crop acreage, and record reservoir levels, the agriculture sector is showing immense potential, and we are ready to capitalize on it. Our operational improvements and commitment to quality production will ensure that we meet the growing demand for fertilizers in the upcoming Rabi season. I am confident that MCFL is on track to achieve strong performance in the second half of the year. We remain focused on driving sustainable growth, operational excellence, and delivering long-term value to our stakeholders. Thank you once again for your support and confidence in MCFL. Let's continue to grow and succeed together in the coming quarters. Thank you. Navin, you are on mute. Navin, you are on mute.
On behalf of all of us at SKP Securities, thank you very much, Mr. Kantak and Murthy, for taking time out to interact with the investors. We look forward to hosting you again for the next quarterly webinar. Thank you very much and have a wonderful day.
Thank you.
Thank you.